Tax brackets for parents and seniors are way different than you think. This might be a real eye opener for some people because I think a lot of people that do some basic tax planning are doing it all wrong. And you're going to see why what they're doing is completely wrong in this talk. So, what we're going to talk about today is first of all, I'm going to give you a tax planning made easy using tax brackets. I'm going to just show you how some basics of how some tax planning is done, and very briefly, but just so you can get the concept. Then we're going to talk about why are tax brackets for parents way different? Why is the CCB Clawback a game changer for your tax planning? What are the actual effective tax brackets for parents? Why do parents benefit more from RRSP contributions than single people? Why are tax brackets for seniors way different? What are the three main clawbacks on seniors? What are the actual effective tax brackets for seniors? How can you plan for your retirement income to be taxed at only 20%? That's a cool one. Then I'm going to show you when is a TFSA and RSP better for you, taking into account what you're going to learn in this video. And then how does a financial plan become the GPS for your life? So first of all, some basic tax planning. So, a lot of tax planning is just basically planning around specific tax brackets. For example, when you're doing, deductions, you want to get, for example, RSP contributions, you want to deduct just enough to get you to the bottom of your current bracket. So that way, for example, if you're in a 40% marginal tax bracket, you contribute enough RSP so that you get a refund of 40% on all of it, but not so much that you go into the next bracket and then part of it you're only getting 30% on. That's some really effective planning. So then if you're setting your income, so a simple example is a lot of self-employed people have a corporation and they're deciding how much to pay themselves, with dividends or salary and how much. And a great way to do it there is often you pay yourself just enough that you can get it at a lower bracket. So you want to get all salary out at 20% or 30% bracket, but not go into the higher bracket. So knowing these brackets is actually very effective for tax planning. The other one is RSPs and also FHSAs compared to TFSAs. You've probably seen lots of articles comparing them. And they always say the best choice for you depends on your marginal tax bracket when you contribute versus when you withdraw, which is usually after you retire. So, for example, you put money in, you get a 40% refund, it stays invested for years and compounding, and then after you retire, you take it out and you only pay 20% tax on it. That's why RSPs work. It's really a cool thing. So now what happens though if you're completely wrong on the tax brackets? So these are the main tax brackets that people normally look at. Okay, this is Ontario for a single person, and you can see that 20% is up to 56,000. Then there's a 30% bracket, and then there's some that are in the 40s, and then it gets up over 50%, which is an old pet peeve of mine that gets over 50. But when you do all the work and the government gets more than half. But anyway, so those are the tax brackets, and you see a lot of planning around those brackets. But now let's take a look at this more broadly. So why are effective tax brackets for seniors or for parents much higher? So parents get a generous Canada Child Benefit, so CCB. So it's actually quite benefit. It's a good large amount. However, it's clawed back based on your income, and it starts at a really shockingly low level. So the clawbacks are effectively a higher tax. So some people have told me it's not really a tax. It's just we're just paying it to people that need it. But it is the same thing as a tax. It is the government that's taking money away from you based on your taxable income. So it's exactly the same thing as a tax. And the truth is you can plan around it. So I'm going to show you how you can do that. So first of all, how does CCB work? So first of all, the benefit is $7,437 a year. These are all tax-free numbers for children under 6 and $6,275 for children aged 6 to 17. So it's a fair amount that you get. So now it's clawed back somewhere between 7 and 23%. Starting at families' incomes of $35,000. Okay, now the clawback starts as low as $17,500 for a couple where you have equal income. So that would be a family income of $35,000. So it's based on the family income. So now the clawback applies if your family income all the way up to somewhere between $220 and $290. So it applies for the for the vast majority of people working that are parents, they're all kind of in this range, somewhere between 35,000 and 220 or 290,000. Most people are somewhere in that range. So that affects pretty well everybody. So why is the CCB clawback a game changer for your tax planning? So it can put you in a higher tax bracket with income of only 35,000. That's family income. So for a couple, your high tax bracket can start at only 17,000 if it's a couple and you have income split evenly. So that's really low that you're getting into a high bracket. I'm going to show you that in a second. Now, this makes RSP contributions worthwhile at much lower income. I'll show you those numbers. And it gives you higher tax deductions or higher tax savings for tax deductions. So any deduction you have as a parent, you get more back than single people do. As for RSP contributions, it's Smith maneuver or interest deductions that are tax deductible or any other tax deduction. And also makes staying home, with your kids easier. Now, so here are the tax brackets for parents. So you see the first one, the 0, that's the actual tax brackets, the basic ones. And then 1, 2, 3, and 4 is how many kids you have. Okay. Now, this is for one parent is working. So either a single parent or a couple where only one person's working. And notice that you get into, the 20% bracket is at 35,000, but with 3 kids, basically 40%. Down at 35,000. So the clawback is actually as much as the income tax over there. And you get a bracket here for people with 4 kids making, 56,000. You're actually in a 53% bracket. It's like one of the highest tax brackets. And it's at only 56,000, which is not high at all. So you'll notice how much higher these are than single people are. So it's a huge thing. So now when you're doing your tax planning, you should be using these numbers, not these numbers if you're a parent. Okay. Now, let's say it's 2 parents and they make an equal income. Then look at it. So you see that down at 17,500, 3 kids, you're already at 39%. So again, at 18,000 income, your clawback is basically as much as the income tax, all the way down at only 18,000 income. It's really shockingly low. And you're getting up to the highest bracket, 51, the over 50% bracket. For most people, starts at 220, but for parents with 3 kids, starts at 112. So it's much lower. So again, these are the brackets, if you're parents, that you should be using when you're doing all your tax planning. So now, why do parents benefit more from RSP contributions? It's because they can get them at much lower levels and they get much bigger refunds based on those brackets. So for non-parents, for single people, it's mostly not worth doing RSP contributions if your income is 55,000 or less, your taxable income. Okay, for parents it's 35,000, and parents of equal income it's down to 17,500. It's worth doing RSP contributions down to there. So if you're, how we said, like, let's say you're making 60,000 and you want to do an RSP contribution. For single people, it's really only worth doing 5,000 and not more. But if you're a parent, you could do a $25,000 RSP contribution, and it's worth it all the way down. So a much larger contribution for parents than for single people. So the tax savings for parents with income between 35 and 50,000. So 35 and 50,000, we're not talking high income. Okay, this is lower income people. But, so it's 20% for single people, but you see it gets up to 35 for 2 kids, 39, 43% when you've got a few kids. It's a big deal. It's a big game changer here. So it's hard for modest income parents to contribute to RSP. I realize that. If you're only making, less than 50,000 and you're trying to contribute to RSP, you don't have it. And you got kids, expenses. However, it is really worthwhile. It's more worthwhile than for single people. So, and one interesting tax planning idea that is often worth it is, so if you're about to have kids, make some RSP contributions while you're working, but don't deduct them. A lot of people don't know you can do that. You can contribute to RSP, but not deduct it. You carry it forward until you have a child. Now you claim the RSP deduction and you get a larger CCB. So effective tax planning. So now, why are effective tax rates higher for seniors? Well, there's 3 main clawbacks that apply to seniors. So one for parents, there's 3 of them for seniors. So there's a 50% clawback on the GIS, and that's for low income people, say under 30,000. Then there's a 15% clawback for the middle on the age credit for middle income people between 44 and 103,000. And then there's another 15% clawback on OAS for higher incomes like between 91 and 148,000. So it affects kind of everybody. Most people are caught up in some of these. So Now, here are the actual marginal tax brackets for seniors. So, if you're age 0 to 64, you get the normal tax brackets, but then these are the tax brackets for seniors. So, when we often say that it's not worth doing RSP for lower income people, it's because let's say your income is under 55,000, you're only getting a 20% refund. Depending on where you are, you might actually be in a 50 or 70% marginal tax bracket after you retire. And notice this, the highest tax bracket in Canada is for seniors with an income between 24 and 30,000. Isn't that shockingly low? This is really low. 70% tax. And the worst thing, of course, I have a video about this, is people that are getting Canadian dividends, because the 50% clawback from the GIS is on the grossed up dividend. Anyway, another topic. So when you're doing planning, you want to be able to look at these brackets that apply once you're 65. So, all the retirement planning around tax brackets, what's your bracket while you're contributing? What's your bracket when you're taking out? This is what your tax bracket is going to be when you're taking money out after you retire. Now, most people can have a retirement income with only 20% tax if they plan for it. And the way to do it is you plan around how much is taxable and how much is not. So here's an example. Someone making 60,000 a year, that would put you into the 30% bracket. Okay. So it puts you into the 30% bracket. However, let's say government pension of 25, RSP of 30,000, and then you have 5,000 of TFSA. So only the 55,000, only the taxable part is taxable, so that's all at 20%, and then the TFSA is not. So you have an income, you have cash flow of 60,000, but only 55,000 is taxable and all of the 20% bracket. So here's an example of someone making 100,000 a year, but still only taxed at 20%. And the way you do it is, you have government pensions and 25 and RSP. Let's say those two together are 55,000. Then you have, a larger TFSA, so you get 10,000 a year out of that. And then you've got a bunch of non-registered investments, giving you maybe 35,000. So all of the non-registered investments, you get, little or no taxable income if you do it effectively. If you're investing, for deferred capital gains, especially. So then you can end up with, 100,000 of cash income, but only 55,000 is taxed, and all at the 20% tax bracket. So now these non-registered investments, 35,000 sounds like a lot, but for people that do a strategy like the Smith where we're using home equity, a lot of times when you retire, you do have a significant non-registered portfolio and maybe even some interest deductions. So that's how you can plan around having only 20%. So that makes a big difference in your planning if you contribute at a higher income, and then you can plan so that your retirement income is only 20%. And it's worth kind of structuring your planning so it ends up that way. Now, when is TFSA or RSP is better for you? So basically what this does is you compare RSP or TFSA. So they're kind of exactly the same. You can have the same investments for them and it grows tax free. The difference is RSP, you get a deduction when you put it in and you pay tax when you take it out. Okay. TFSA, there's no tax on it. So the difference between them, the one that's better is, depends on your marginal tax bracket before you retire versus what it is after you retire. So bracket when you're contributing versus when you're withdrawing. Okay. Now remember, when you're withdrawing, when you're contributing, if you're a parent, then it's all these parents, higher tax brackets that are for parents, right? And when you're retired, it's the higher brackets that apply to seniors. So you got to find those two charts and see, okay, which one's going to apply for you and see how it all works. Okay, so the general rule is the lower tax bracket. If you're going to be in a lower tax bracket after you retire, then RSPs are better. If you're going to be in the same tax bracket, it's not a big difference, but there are some other factors that make it a difference. But part of it also is sometimes then TFSA is better because there are some clawbacks after you retire, and more than just the ones that I show you there. So your actual bracket may, even if they're the same, it may end up costing you more after you retire, So that's why if you're the same bracket, TFSA is generally a little bit better. And then if you're going to be in a higher tax bracket when you retire, then TFSA is better. Now you'd say, who's in a higher tax bracket after when you retire? Well, if you look at that chart again and see the tax brackets when you retire versus before, you could be the same income and yet at a significantly higher tax bracket after you retire. So that's how it can easily happen. So All right. You got to remember now when you're tax planning, this is the place where so many people get wrong. They just look at the basic tax bracket, compare now versus what income they think they're at now and what income they think they're going to be after when they retire. But they're missing that, what tax bracket are they actually at because they're a parent, and what tax bracket are they actually going to be at after they retire. Now, this is where a financial plan can really help you out. It's the GPS for your life. It's your road to get financial independence. And I can tell you, life feels completely different when you are financially independent, And you have a financial plan, you want to make it your own goal. You spend some time, you figure out exactly what's the lifestyle you want. You do it early, you think long term, you come up with a plan. And we have software, we call it Interactive Financial Plan, where you can actually look at many different life options within a few seconds. We can show you, what happens if you work and people say, what if I, want to retire 1 or 2 years earlier? What would I have to do that? Or I want to retire and get 10,000 more in vacations. I would take lots of travel when I retire. So what would I have to do that? And you can show these, all very quickly. So a plan just lets you live life intentionally. Real freedom is financial freedom. That's what a plan lets you do. So now the big difference with a financial plan is, now, you know what your tax bracket is now, and you know what it's going to be after you retire. If you have a plan, you know those numbers, and you know them based on, the actual brackets for seniors and for parents. So you know what your actual brackets are. So now you're not guessing or estimating which one is better. You know exactly whether RSP is better or TFSA and exactly how to plan around it. So it's having a financial plan, makes tax planning much more effective. That alone can far more than pay for the cost of a plan. So, all right. Well, thanks for listening. So what we talked about today is we just a basic tax planning made easy using tax brackets. Why are tax brackets for parents way different? Why is the CCB Clawback a game changer for your tax planning? What are the actual effects of tax brackets for parents? Why do parents benefit more from RSP contributions than single people? Why are tax brackets for seniors way different? What are the three main clawbacks on seniors? What are the actual effective tax brackets for seniors? How do you plan for your retirement income to be at only 20%? When is TFSA or RSP better for you, taking into account the actual brackets for parents and seniors? And then how does a financial plan become the GPS for your life? So thank you for listening. My name is Ed Rempel. My blog is Unconventional Wisdom. It's the #1 blog in Canada for a full-service financial planner. It's just edrempel.com. If you're interested in potentially talking to us, we offer a free 30-minute consultation to see if we're a fit. And it's just edrempel.com/talk. I also have a podcast on YouTube. The podcast is edrempel.com/listen. YouTube is edrempel.com/watch. Thanks for listening, and we'll talk to you next week.